Welcome to The Explainer. I'm absolutely thrilled to have you here today because we're going to unpack a massive, honestly, often hidden engine of the global economy, real estate services. When you walk through a bustling city or some sprawling corporate park, it's so easy to just look up at the glass and steel and think of real estate as simply physical space, right? But in reality, there's this massive, intricate web of professional services keeping all those structures operational, profitable, and increasingly sustainable. So we really have to ask ourselves, what truly drives the global real estate market? I mean, it's not just the bricks and mortar. It's the vital day-to-day services that manage, optimize, and actually exchange these properties. These service providers act as the absolute critical link between real estate owners, tenants, investors, and developers. But as you can imagine, with such massive scale comes massive responsibility, especially when we're talking about environmental impact and professional ethics. To really understand how this industry's environmental and ethical impacts are measured, we're going to look straight at the rulebook. We'll be using the SASB's Sustainability Accounting Standards for Real Estate Services, which, as a reminder, are now governed by the IFRS Foundation. These standards are exactly what companies and investors use to identify the kind of sustainability-related risks and opportunities that directly affect cash flows and the cost of capital. Okay, let's dive into this. Here's our roadmap for today. First, the real estate services engine. Second, measuring sustainability in management. Third, managing brokerage and appraisals. Fourth, tracking core activity metrics. And finally, why standardized measurement matters. Section 1. The real estate services engine. Breaking down the primary services. So before we can measure the impact of an industry, we kind of need to know what it does on a daily basis. Let's look at the sheer breadth of primary services offered to clients. First up, property management. Now, this isn't just, collecting rent. This includes the vital day-to-day operations like negotiating leasing agreements, managing really complex tenant relations, executing heavy-duty building maintenance, and ensuring building security. Then we have brokerage services. These are literally the lifeblood of real estate liquidity. Brokerage professionals facilitate the actual sales and leasing transactions. They're the ones connecting buyers with sellers and landlords with tenants. And finally, we have specialized advisory. This covers appraisals, which is the highly technical process of developing a professional opinion of a property's value, as well as specialized information and consulting services. Basically, these folks play absolutely critical roles across the entire real estate value chain. Section 2. Measuring sustainability in management. Powering the grid and tracking efficiency. Buildings and the activities taking place inside them are massive drivers of resource consumption. We're talking greenhouse gases, vast energy and water usage, and waste. Because of this massive footprint, property managers actually have a unique opportunity to improve performance through what the SASB standards call sustainability services. To track this, the standards use specific metric codes like IFRS-410A.1 and 2 to measure both the financial revenue generated from these services and the physical scale. And by scale, we mean the total square meters and the actual number of buildings receiving those services. But what actually counts as a sustainability service? Well, the standards are very clear on this. It includes things like utility data management, benchmarking water usage, helping a building secure renewable energy, or guiding a property to achieve a LEED or ENERGY STAR certification. Notably, this explicitly excludes standard operational tasks. So routine facilities maintenance or janitorial services, those don't count here. This is strictly about dedicated services that directly improve efficiency and reduce environmental footprints. So the crucial point here is how you count the space being managed. The standards dictate that floor area is only included when the real estate owner has actual operational control. Consistent with the GRES Real Estate Assessment Reference Guide, this basically means the owner actually has the authority to introduce and implement operating, health, safety, or environmental policies. Simply put, if the owner can't pull the levers to make changes, that floor area isn't counted in these specific sustainability metrics. And this brilliantly illustrates how the industry standardizes success across the globe. Under metric IFRS 410A.3, companies track the floor area and the number of buildings that have officially obtained an energy rating. This is a scheme that formally measures a building's energy performance. And because real estate is obviously global, the standards recognize regional equivalents. So you have ENERGY STAR in the US and Canada, EU Energy Performance Certificates in Europe, and neighbors in Australia and New Zealand. That standardization ensures we can compare apples to apples, no matter where the building sits on the map. Section 3. Managing brokerage and appraisals. Navigating ethics and conflicts of interest. Okay, so we've talked about the environmental side, but this business model is equally dependent on client trust, loyalty, and professional integrity. In specialized advisory and brokerage, the risk of conflicts of interest can be, well, remarkably high. To monitor this risk, SASB uses metric IFRS 5110A.1, which tracks brokerage revenue specifically derived from dual agency transactions in real estate sales. To understand why this is such a highly monitored metric, we first need to define dual agency. This happens when a single entity represents both the buyer and the seller in the exact same real estate brokerage transaction. You can instantly see the potential for a massive conflict of interest here, right? I mean, how do you negotiate the best price for the buyer while simultaneously securing the highest price for the seller? It requires incredibly strict ethical boundaries. So the standards require companies to separate out revenue from standard transactions from those with a higher conflict risk, like those dual agency sales we just mentioned, or transactions where the firm also provided the property appraisal. For these higher risk transactions, firms are expected to clearly describe their internal policies. They need to detail how they train employees, enforce codes of ethics, and implement internal reporting mechanisms just to ensure that transparency, duty of care, and fiduciary responsibility are strictly maintained. Because let's face it, if a firm fails to manage these ethical risks, the consequences are severe. Metric IFRS 510A.3 tracks the ultimate consequence: the total monetary losses incurred from legal proceedings associated with professional integrity. This includes liabilities from negligence, malpractice, data security loss, fraud, corruption, and bribery. And importantly, this metric tracks the actual monetary liabilities paid out. So, things like settlements and fines, but it excludes the legal fees spent on defense. It's a really stark, bottom-line indicator of a firm's ethical health. Section 4. Tracking core activity metrics, measuring the massive scale of the industry. To make sense of all this sustainability and ethical data, investors really need to understand the sheer physical scale of the entity they're evaluating. So, the standards establish foundational activity metrics to normalize the data. First, we look at the physical scale of property management. Companies must report their total number of property management clients, and that's categorized by tenants versus real estate owners. Then, they report the total floor area under management in square meters, and the total number of physical buildings under management, assuming, of course, that owner operational control we talked about earlier. Let's move on and see how this builds into transaction volume. So, alongside the physical space, companies also report the sheer volume of their advisory and brokerage activities. This is quantified by reporting the number of leases transacted, again, split between tenants and owners, as well as the total number of appraisals provided. By tracking these activity metrics, stakeholders can accurately compare the sustainability and ethical performance of, say, a boutique local firm against a massive multinational corporation. It levels the playing field. Section 5. Why standardized measurement matters. The bottom line for investors and clients. Okay, we've gone through a lot of technical reporting standards today, but what is the real-world financial value here? Why does this actually matter to you? Well, the source material makes it abundantly clear. Robust real estate services directly impact the bottom line. Effective sustainability services yield huge financial benefits by improving overall asset values and naturally increasing tenant demand. Because let's be real, more and more companies want to occupy green buildings. Furthermore, resource efficiency directly decreases operating costs for owners and tenants alike. On the flip side, rigorously managing ethical risks in brokerage and appraisals protects client trust and brand value, entirely avoiding those costly legal fines and the loss of market share. Ultimately, these standards help entities disclose risks and opportunities that affect their cash flows, their access to finance, and their cost of capital over the long term. Which leaves us with this final thought. We all know the old business adage, right? What gets measured gets managed. By applying these rigorous, standardized metrics to both environmental sustainability and professional integrity, we aren't just changing spreadsheets here. So, the question is, how will this unprecedented transparency reshape the skylines of tomorrow? Thank you so much for joining me on this deep dive into the SASB standards for real estate services, and I'll see you on the next explainer.